current environment obviously is unusual. This pandemic is impacting all of our lives in a very significant way. And we think it's important to be engaging with companies in particular during times of crisis. So we actually wrote a letter to companies back in the early part of the pandemic to really state our beliefs on how they should be behaving during this crisis in terms of how they treat not just shareholders, but all of their various stakeholders. We've also had many positive company engagements throughout the quarter where we discussed both their response to the pandemic, but also other issues that are topical today. For instance, the issue of systemic racism has gained a lot of attention recently, and we've had a lot of productive conversations with companies about this particular issue and how they're reacting to it. So absolutely, we do expect to have a positive influence as active managers on companies in all types of environments. The sustainability leader strategy was up double digits during the third quarter, and it generated better than benchmark returns in 9 out of the 11 sectors in which we're invested, most notably in staples, industrials, and technology. And our top contributors came from a variety of different sectors. So Apple, for instance, in the tech sector, despite that sector and Apple selling off during the month of September, it was still up greater than 20% during the quarter. Vital Farms, which is a recent IPO in the sustainable agriculture space. They're a leader in pasture-raised eggs. SolarEdge, this is a long-term holding that we've had in the solar space. It's a very attractive niche, growing very nicely. Vestas, another renewable energy company that we own, a leader in the wind turbine manufacturing space. They have continued to have strong, robust demand despite the recession. There were 2 sectors during the third quarter where the strategy underperformed, consumer discretionary and healthcare. And in consumer discretionary, the portfolio performed fine. We were up double digits, but that was a little bit below what the benchmark return was in that sector. In healthcare, this is the only sector where we were down on an absolute basis during the quarter. We were down mid-single digits. The benchmark return was up mid-single digits. And that was really driven by 2 of our biotech holdings. BioMarin, which had a delay in one of its key pipeline programs. We do believe that this product will eventually be approved for hemophilia and be an important growth driver for the company. And then Gilead, which did have a soft second quarter, which was reported during the third quarter, that caused that stock to be down. More importantly, they did announce a very strategic acquisition during the quarter, a company called Immunomedics, which has a very promising therapy that was recently launched for a variety of cancer indications. And we believe that this drug has a lot of revenue potential in the billions of dollars and could be an important growth driver for Gilead going forward. So we feel quite good about how they're positioned going into next year and beyond. So the market environment right now is being dominated by a few important factors, one of which is certainly the pandemic. And we're watching closely to see how that unfolds as we enter the winter months. So that's something that we need to monitor closely. That's going to have an impact on the economy if we do have to shut down in various regions, geographies, areas. That could have an important impact on how markets behave. There's a presidential election coming up in just over a month, and that is going to lead to various outcomes depending on what the outcome is in terms of the outlook for certain industries, other industries, and so we're also mindful of that. In general, we take a very long-term approach to investing. We believe investing in high-quality companies that have attractive sustainability profiles are going to do well in a variety of environments, and so it doesn't really change our overall management of the strategy, but tactfully we do need to be thinking about influences on the market that could be more short-term in nature to make sure that we aren't caught off guard.